Have you ever wondered what's really going on behind the headlines? While the mainstream media keeps us glued to stock market tickers, endless inflation debates, and the latest geopolitical drama, something far more significant is happening in the shadows. It's a silent, aggressive scramble for physical gold by the world's two superpowers, China and the United States. And let me be clear, this isn't just a hedge. This isn't your standard portfolio diversification. This is preparation. Why are both countries hoarding gold at the fastest pace we've seen since the 1970s? The answer lies deep in economic history. Every time a global financial system enters its final phase, drowning in debt, devaluing its currency, and fracturing along geopolitical lines, the real power shifts. It moves away from paper assets and flows back into hard, unchangeable stores of value. Think about it. Gold can't default. Gold can't be printed into oblivion. Gold's value doesn't rely on trust or confidence in a government, but fiat currencies, complex derivatives, and even digital assets. They can all collapse the moment that trust evaporates. So, stay with me until the very end. What I'm about to explain isn't just speculation. It's based on undeniable economic behavior, and the conclusions might just shock you. If you're new here, do me a favor and subscribe right now. Hit that notification bell so you don't miss what's coming. And before we go any further, drop your prediction in the comments below. Do you think gold will be the final weapon in the economic power struggle between the U.S. and China? I want to know what you think before this video is over, because you're about to discover why this gold race is the single most important signal of what's coming next for the global economy. Let's start with China. The real reason China is aggressively accumulating gold isn't just about protecting its economy from sanctions or hedging against inflation. It goes much deeper. It's about achieving long-term monetary sovereignty. It's about preparing for a world that is no longer dominated by the U.S. dollar. For years, China has been methodically reducing its exposure to U.S. treasuries, cutting its reliance on the dollar for international trade, and quietly using the People's Bank of China and state-owned entities to absorb massive amounts of gold from the global market. They do it cleverly without triggering sudden price surges that would alert the public. Officially, China reports its gold reserves at around 2,200 tons. But don't be fooled by the official numbers. Many seasoned analysts estimate the real figure could be anywhere from 5,000 to even 10,000 tons. Where is the rest? It's held off the books, stored in the vaults of the Communist Party and other strategic institutions far from public view. This isn't just about storing wealth. It's a strategic move. It's about being ready to reprice global currencies, potentially using gold as the anchor during the next great monetary reset. While the average person is busy chasing the next stock market bubble or crypto pump, central banks are quietly securing the one asset that has retained its value through every financial crisis in history. Now, what about the United States? The U.S. officially holds the world's largest gold reserve, claiming over 833 tons. This has been the bedrock of the dollar's global dominance for decades. But here's the catch. The vast majority of this gold hasn't been properly audited in decades. This lack of transparency has created a huge problem. Central banks around the world are starting to lose faith in the paper-based gold system, like the one run by the London Bullion Market Association. They're realizing that a paper claim to gold is not the same as holding the physical metal in your own vault. This is why we're seeing a massive trend of repatriation. Countries like Germany, the Netherlands, and Turkey are demanding their gold be returned from vaults in New York and London. They want their physical gold back on their own soil. They understand that in a real crisis, possession is everything. This growing distrust is a direct challenge to the U.S.-led financial order. If the world stops believing that the U.S. actually has the gold it claims, the foundation of the dollar's power crumbles. So, the U.S. isn't just sitting back. While China is buying, the U.S. is focused on maintaining control of the existing system and reinforcing the perception of its gold holdings. The race isn't just about who can buy the most, but also about who controls the narrative and the infrastructure of the global gold market. It's a high-stakes chess game where one side is accumulating new pieces and the other is trying to prove the king is still on the board. Let's zoom out and look at the bigger picture. We are living at the end of a massive debt supercycle. Global debt has exploded to levels never seen before. Governments around the world have only one easy way out: devalue their currencies, in other words, inflation. They print more money to pay off their debts, which makes the money in your pocket worth less and less. In this environment, paper assets like stocks and bonds become incredibly risky. They are promises denominated in a currency that is actively being debased. Gold is the ultimate antidote to this. It's a physical asset with no counterparty risk. Its value isn't a promise, it just is. This is why central banks, not just in China and the US, but all over the world, are buying gold at record rates. They are quietly exiting the system of paper promises and moving into the safety of real, physical wealth. They know what's coming. They are preparing for a system where trust has broken down, and the only thing that matters is what you can hold in your hand. This isn't a new story. History is filled with examples of this. When the Roman Empire debased its currency, people hoarded gold and silver. When the Weimar Republic in Germany experienced hyperinflation, the only thing that held value was tangible assets. Every financial reset throughout history has involved a revaluation against a hard asset, and gold has always been the primary choice. So, what does this mean for you? It means you need to pay attention to the signals the smart money is sending. While everyone else is distracted by the noise, the world's largest economic powers are making a very clear and powerful statement. They are moving into gold. This isn't financial advice, but it is a call to be aware, to understand the game that is being played at the highest levels. The frantic accumulation of gold is not just another market trend, it's a profound signal that the very foundations of our global financial system are shifting. This is a battle for the future of money itself. China is positioning itself to challenge the dollar's supremacy by backing its currency, at least implicitly, with a massive and growing stockpile of real gold. The U.S. is trying to maintain its position by holding onto its legacy as the world's largest gold holder and controlling the financial plumbing. The winner of this race will likely dictate the terms of the next global monetary system. And for everyone else, the message is clear. In a world of uncertainty and depreciating paper, physical gold is re-emerging as the ultimate safe haven, the final anchor of economic stability. The race is on. The pieces are moving. And now, you know what to watch for. It's not the daily stock market fluctuations, but the monthly central bank gold reports. It's not the latest inflation number, but the quiet movement of physical gold bars across the globe. This is the real story, the one that will define the next decade. Let's get straight to the point. The United States and China are in a high-stakes race for gold, and it's not just for show. Both superpowers understand an uncomfortable truth. The era of unbacked fiat money, the system we've lived with for decades, is approaching its breaking point. When that happens, the nation holding the most gold will have the strongest negotiating position in designing the next global monetary system. Think of it as a game of musical chairs, and the music is about to stop. The chair that everyone will be scrambling for is gold. Right now, American dominance is built on the petrodollar. Every time a country buys oil, it typically has to use U.S. dollars. This creates a constant global demand for the dollar, keeping it strong. The U.S. enforces this system through its powerful military, its economic influence, and its diplomatic muscle. But the cracks are starting to show. We're seeing rising global fragmentation, the expansion of the BRICS nations, Brazil, Russia, India, China, and South Africa, plus new members, and more international trade being settled in currencies other than the dollar. This isn't just a minor trend. It's a direct challenge to the foundation of American power. The petrodollar model is weakening, and everyone at the top knows it. So what is China doing? It's playing the long game. China is strategically building its financial independence, and gold is the cornerstone of its strategy. It's using its massive gold reserves to back new trade agreements across Asia, Africa, Latin America, and the Middle East. Essentially, China is creating a parallel financial system, one where the U.S. dollar is no longer the undisputed king. And it's not alone. Russia, Turkey, India, and even some Western-aligned economies are following suit. They are all accumulating gold in historically unprecedented quantities. Just look at the data. Central banks bought more gold in 2023 than in any year since records began back in 1950. They are buying regardless of the price, ignoring short-term volatility. This isn't random speculation. This is strategic positioning for a monetary endgame. When central bankers, the most conservative players in the financial world, make a move this big, it tells you exactly how serious this global shift is. Now, let's look at the United States. Don't think for a second that Washington is asleep at the wheel. The U.S. maintains its dominance through its control over key global institutions, the International Monetary Fund, the World Bank, the SWIFT payment system, and its influence within NATO. These institutions create a framework that keeps the dollar at the center of global finance. However, the U.S. also understands that trust in the dollar is eroding. How could it not be? The national debt has skyrocketed to over $34 trillion, with massive deficits projected for years to come. This, combined with intense geopolitical strain, is causing countries around the world to question the long-term stability of the dollar. So, what is Washington's strategy? It's a two-pronged approach. First, in the short term, the Federal Reserve is keeping interest rates high. This makes the dollar more attractive to foreign investors, defending its value for now. But they're also thinking long-term. The U.S. holds the world's largest official gold reserve, and it's protecting these holdings as a strategic asset. Why? They may be preparing for a future where a digital dollar is introduced, possibly with some form of gold backing, to restore confidence if a major debt or currency crisis hits. It would be A. Break glass in case of emergency. Move to reboot the system and maintain control. China, on the other hand, is preparing for the exact same crisis, but with the opposite goal. Its strategy is to wait for confidence in the dollar to collapse. When that happens, Beijing plans to introduce its own gold-supported digital yuan as a credible alternative. This would offer major economies a ready-made pathway to transition away from their dependency on the dollar. So you have two superpowers with two different approaches, but both aiming for the same objective: to secure monetary control when the current unsustainable financial structures inevitably implode. This isn't just about economic competition, it's about who gets to write the rules for the 21st century. This is why the next crisis will be fundamentally different from 2008. The 2008 financial crisis was about bad loans and credit markets. It was a crisis within the system. What's coming next is a crisis of the system itself. It will be a battle for global monetary authority. So let's stop pretending this is just about investing in a shiny metal. This is about survival at the highest level of global strategy. When financial chaos finally arrives, and could be triggered by anything from massive sovereign debt defaults, a major geopolitical conflict, market destabilization driven by artificial intelligence, or severe energy disruptions, the asset that will matter most is the one that cannot be printed out of thin air. It's the one that cannot be seized electronically with a single keystroke, and the one whose value cannot be manipulated away by panicked policy decisions. That asset is gold. This is why central banks are accumulating it at levels that mainstream financial analysts and corporate media refuse to openly discuss. They might mention it in passing, but they won't connect the dots because the implications are too unsettling for the status quo. This historic gold accumulation signals an expectation of a deep structural transition, not just temporary market volatility. It's a vote of no confidence in the future of unbacked fiat currency. What's coming requires clarity, not wishful thinking. The financial landscape is shifting beneath our feet, and those who understand the forces at play will be better prepared for what lies ahead. Stay with this channel and make sure you subscribe now, because we're going to continue breaking down these complex topics to give you the clarity you need. Now I want to hear from you. Drop your thoughts in the comments below. Do you think gold will return as the backbone of the next monetary era, or will a new, purely digital structure completely bypass it? Your comment today might just be the most prescient one before this historic shift is finally confirmed. Thanks for watching, or